Beach Development Authority's monthly meeting. It's October 19th, 2021. The first item on the agenda is public comment. At this point, the floor is open to speak with a 3-minute limit on posted agenda items for anybody who has signed up yesterday.
No one signed up.
Nobody signed up. Thank you, Vicki. All right, the next item on the agenda is the meeting minutes. Can I get a motion to approve?
Second.
All right, we've got a motion from Dot and a second from Mr. Strange. All in favor, say aye. Aye. All opposed, same sign. That motion carries. Thank you. Next item on the agenda is the financials.
Morning, Madam Chair, members of the commission. What we have before you this month is the operating budget for FY22. Typically, we'd bring this to you in May, but we have not had an accountant, so we have a backlog of work, but we're happy to report that Kathy and Taylor are hiring a accountant that will start in November. And the other reason is that this year's operating budget is very unique in that typically your operating budget hovers around the $200,000 to $300,000 range, but this is the first year that we're transferring the EDIP into your operating budget so that you have access to those funds to be able to roll over year after year and not have to, if they were in the city's operating budget, they would have to be basically swept back at the end of the year and then reappropriated. Now they used to be in the capital improvement program, but as you know, EDIP sometimes is for capital, sometimes it's for reimbursement of, or sometimes it's for incentivizing jobs and other criteria. So we felt like it was most appropriate in the authority's operating budget. So council appropriated that July 1st, and it was transferred from the city to the Development Authority's account in September. So we're bringing before you this year's budget and kind of showing you the past 2 fiscal years that, as I indicated, your operating budget has hovered around the $200,000 to $300,000 range. This year it's significantly bumped up because of the EDIP. In terms of the bottom line, the net effect on the operating budget is a plus $1.15 million number, mostly because of that EDIP. And when you look at, let's see here, when you look at the, and this is as of September 30th, Blake Huffman has, in working through the auditor, the external auditor for your fiscal year 21 closeout, we know that the unrestricted cash balance is nearly $4.5 million, and then restricted balance is $11.8 million. And next month, actually, Terry Beckart will be here with the city auditor and the Department of Finance to do a report on your fiscal year 21 financial closeout. I'm happy to take any questions if you have them.
Thank you, Brian. Any questions for Brian on the proposed annual operating budget? It's good to hear that we've hired an accountant that's going to start in November.
Alex, do we need a motion? So what we're seeking from the authority, Madam Chair, members of the authority, is basically a motion or to consider and approve the operating budget so we can move forward to the rest of the year.
All right. Chair will entertain a motion to approve the operating budget if there's no further discussion.
Motion to approve.
Got a motion and a second. All in favor say aye. 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 All opposed, same sign. That motion carries. The next item on the agenda is a briefing from the city's auditor. An update to the 2018 audit.
Good morning, and thank you for having me here and giving me the opportunity to present the results of our audit. Before I get started, I do want to thank the members of Economic Development, Taylor, and everybody that assisted us during the audit. So we appreciate their cooperation and assistance. Okay? And this is a follow-up of an audit we did in 2018, and we've made great strides, and we want to recognize the work that Economic Development and Virginia Beach Development Authority have made since that audit. Due to the nature of the various grants and the material dollar amounts of some of those grants, we want to and will continue to periodically perform follow-up audits to ensure that the internal controls are in fact in place. Okay, so just a little bit of background, and I know you're familiar with these because these frequently come to you, but just a real quick briefing before we get into the results. Obviously, the EDIP is a great resource for the Development Authority to attract companies to come to Virginia Beach or remain in Virginia Beach. The policy specifically spells out the various 4 parts, Part A, Part B, Part C, Part D. The one that is most frequently and probably you're more familiar with is Part A. Covers qualifying new businesses to relocate to Virginia Beach and existing businesses to remain or expand operations. All right, and then under Part A, if you dive into it, and this is where we focus a lot of our audit on, covers qualifying new businesses to relocate based on one or the following criteria. Based on generation of direct tax revenue, capital investment, award is based on job creation at tiered amounts, and this is the most commonly used. Okay? And on job creation, it specifically says it must be filled for 1 year, and it must be in the city of Virginia Beach. If there are situations where an award or a grant is awarded does not meet one of those 3 criteria, then that needs city council approval. Okay? All right, so this is a pretty straightforward process. You submit the application, staff will review, VBDA closed meeting sessions, VBDA public action, and submit performance documentation. That is key. And if I was on the board, that would be one of the questions I would be asking is, has the company submitted performance documentation to satisfy the criteria in which the grant was awarded? Okay. So obviously they're submitting something, right? They're submitting something because they want to be eligible to receive the grant. So the key is from staff as well as you as commissioners is that documentation sufficient? And who has reviewed it and verified and validated that it is sufficient? Okay. Once that has been submitted, it's going to be a staff review, and the grant is dispersed. All right. All right, so getting into the results, and we looked at various, like I said, we looked at various grants, and they're doing a good job and the best they can do, and these are opportunities for improvement, opportunities to close some holes in the process. Okay? So number 1, inadequate support and documentation for machinery and tools. And this is getting back to, is it adequate supporting documentation to ensure and everybody's comfortable that it's meeting the criteria? Okay. So we had 1 recipient receive EDIP funds for capital investment in new machinery and tools. Supporting documentation provided was solely generated by the recipient. Okay. Proper support for the disbursement of EDIP funds should be third-party documentation, especially if it's machinery and tools. Ideally, what we would want to see or what we would be looking for is like invoices. Okay. If you travel, you went out of town, and you want to be reimbursement for costs you incurred, you'd submit receipts. Okay. If you bought something and you want that you paid for, and you want to be reimbursed, ideally you would want to see the invoice. That's the strongest form of documentation because it's a third party. Yes, their machinery and tools return is submitted to the Commissioner of Revenue, okay? But it's a copy of what they prepared. And the Commissioner of Revenue, they are using that to assess taxes. Whereas, as the authority, you are using that to reimburse. You're dispersing funds. Commissioner of Revenue is not dispersing funds. So they may have a different threshold and say, well, we're submitting this to the Commissioner of Revenue, but it's not actual third-party invoices. So ideally, that's what we would like to see. Okay, so that's why we came up with finding one. So for any recipient, just ensure that what they're submitting is in fact, you can validate that's what they spent, and that's what you're reimbursing them for. Okay. All right, finding number 2, again, this is another EDIP grant. And I think everyone's familiar with this one. No effective process in place to verify recipients' performance. And again, we're getting back to, is the documentation that is being submitted for performance, is everybody comfortable with it? Does it meet the criteria in which the grant was originally awarded? Okay. Especially when we're getting into job creation, which I said is the number one criteria we use in awarding the grants is job creation. So in this case, it was FTE. You as an authority talked about this one, but it still gets down to is FTE, full-time equivalent jobs, we stated, are they in Virginia Beach? Are we comfortable that they're meeting the criteria? Okay. So in this case, we said that we need to develop an effective process of verifying performance is developed at the time of the EIP grant award so that when they're submitting the documentation for approval, it can be easily validated. Okay. And we get into this in other similar findings, but I know at the state level, they have a specific measure in regards to how are they going to calculate jobs. Right now, basically, the company is submitting an Excel spreadsheet, and they're saying, these are all the positions we created. Okay. So we just need to strengthen that process. Any questions on either finding 1 or 2 before I go on? Okay. All right, finding number 3, filling of job positions not according to the EDIP policy. And again, job creation is the number one criteria that we utilize. And again, it states 1 year, right? And in the city of Virginia Beach. So I believe in this case, it was, we were dispersing grants to an organization where the job was not filled for 1 year. Okay? And we use as 1 year as the date of award. So they had created jobs previously, or if those jobs were in the process of being filled, I'm not sure we want to count those like retroactively. Okay? So if we're saying on July 1, we awarded the grant, we can't say, well, last October we created those 7 jobs or those 10 jobs. Okay? Because that's not the intent of the grant. Okay. So it says here in the green box, 2 recipients had positions filled before their resolutions were adopted. The resolution date is the official start date of the grant. And only those positions created from that date and up to 36 months thereafter are considered as part of the performance period. Okay? So again, just ensuring that what they are submitting meets the performance criteria. Okay. So the recommendations we had is, now if we want to change that, then obviously we would have to revise the policy. I'm not sure that's the way we want to go, but if we do, we just need to make sure that matches the policy. Okay? And then ensure that disbursements are made only for positions or retained within the performance period and after the positions were filled more than 1 year. Just keep in the back of your mind when you're approving, those are the questions you want to ask. Right? Did they meet the criteria? Has it been 1 year? And were those jobs created after the Finding 4 was another grant. And this was due to the large amount of EDIP funds dispersed, we deemed that the proof of performance for job expansion and retention should be supported by a stronger form of evidence, such as HR reports. We mentioned there could be reports that they file with the state, the EC reports. One thing we were talking about is up front, just asking the company, if this grant is contingent on creating, say, 50 jobs, what documentation, what report, what HR, what payroll report can you run that could show these jobs were filled? And if that's discussed up front, then when it comes time for performance, it's not like, well, what can you provide us? How can you prove this? Okay. Because all organizations, even here in the city, we can run position control reports from a certain date to show where jobs were created. But I think a lot of that should be discussed up front. Then it's not on the back end, because right now, literally, the support they're submitting is an Excel spreadsheet with positions, okay, and salaries. Okay, in looking at some of those positions and salaries, some of those could be questioned. We're not saying they aren't, but that's really the documentation we have for job creation is an Excel spreadsheet saying these are 30 jobs, these are the salaries, and look, it's above the average that was agreed upon. Okay? But most companies, and I'm sure you guys are familiar as business owners, have reports, either internal or external, that shows more harder evidence to provide that job creation. Okay. All right, so the recommendations here require a strong supplemental form of evidence to ensure that the disbursements for job expansion retention is properly made to strengthen the integrity of the EIP process. Determine the state's method for verifying job creation and, where possible, align with the state's methodology. Due to heavy involvement in the disbursement process, have the VBDA accountant sign the disbursements routing sheet. Okay, there is a routing sheet with 3, I believe it's the director, the project manager, the city attorney. If you want to get the accountant, or if you're going to put that responsibility on the accountant, then have him sign off as well. All right. Okay, number 5. And speaking of the accountants, everybody knows how important the accountant is to ensuring the books and the records are accurate and up to date, and all accruals and disbursements are properly posted, so we have an accurate balance. And we're all quite aware that we have been without an accountant. Okay? But we looked at the incentive funds available, and it hasn't been updated. Okay, the last time that was presented to this authority was January of 2021, and it presented December 2020's month-end balance, which at the time was 1.7 million. Okay. And this was an aggregation of all economic incentive programs. While subsequent monthly cash flow presentations were made, they didn't show the incentive funds balance. Okay. So with the incentive funds, you have a balance, you can look into your bank account and say, I have this much. But more importantly, not what you have on hand, but what have you allocated? What have you approved? What have you accrued? And if you don't know that, and those haven't been posted, there is a risk that you could overcommit. If you look at the book, though, we've got 1.7 million, but I mean, we could have made awards over 3 million. Put you in the hole. You never want to overcommit. Okay? So the exact amount of the incentive funds currently is unknown, and we did try to determine and figure out what it was, but because the spreadsheet hasn't been updated, I could have took everything you guys approved since January and backed that out. But even prior to that, there were approvals that weren't posted to the account spreadsheet. So the true number of commitments is unknown. Okay? All right, and the prior accountant kept a spreadsheet, and it was an internal spreadsheet, and basically it was posting, you got your annual appropriation, but it goes back, because if you look at the spreadsheet, there's commitments that were made 2015, 2016, 2017, 2018 that haven't been dispersed. Some are open, some are closed, some we don't know where they're at. Okay? So, but you got to account for those, because those are commitments, and as an authority, you never want to overcommit. Okay? So the incentives award spreadsheet, the primary record for tracking and summarizing all important information, has not been updated since February 2021. Based on our analysis, we noted that there's about 596,000 potentially EIP funds that could be committed to funding future projects. Okay, so we did see that, and we came up with that number. We'll go through some of the details. But that 596,000 is coming from projects that funds were committed, but it's showing as closed. So say, for example, if you committed 100,000, but they never performed, and the performance period has ended, so in essence, it's closed, because the performance period has ended. However, the commitment is shown still on the spreadsheet. It's just like a capital project that has closed but still has leftover funds. So if you close that out, then you can put that 100,000 back into the pot, which is a good thing. Okay? So there's about 596,000 potentially available. This is the total undispersed amount from projects that have ended but not closed. Okay, so we know they're ended. In the earliest, which is from fiscal year 2014. Okay. But the spreadsheet does not adequately depict where the award truly stands. For example, the user of the spreadsheet would not know why there was 0 disbursements for a project that has ended. Okay. So we went through in detail to the spreadsheet, and so these were some of the things we noted. Okay. And this is how we came up with our dollar amount. So if you look at number 1, performance period has ended but not closed and not paid at 100%. Okay, so you awarded, for example, 705,000, you dispersed 566,000, performance period is ended, but it's not reflected as closed. So we're saying potential, because that's 138,000. Okay. Number 2, performance period ended, but not closed and 0 paid. That could be another 30,000. Okay, number 3, 100% paid, but not closed. Number 4, payments made, but not performed. Okay, and I believe that is the one we have an asterisk on. That's that because. Okay, awards for job expansion, but no entry in all other, no other comments. All right. And if we go to the next slide, we're going to just continue. Number one, performance period ended but not closed and zero paid. Okay, so there's $235,000. When we're looking at it, it's ended, but we never paid out anything. Okay? And so this is when you have the account. We've got to kind of like go back. Is it just a mistake? We didn't post it. You know, what's really going on? Number two, no entry in performance period end date and zero paid. And then number three, performance period ended but not closed. Okay, so that comes up to $364,000. So when you add all of that up, that's where we get back to that potential. Okay? But this is where we get into not knowing what we committed, has everything been posted, and we're approving on a monthly basis grants. And we may have an idea in the ballpark, but we're still not sure the exact balance. So the recommendation here is analyze and update the total incentive award spreadsheet to ensure that it properly reflects the status of the projects and to determine the amount of available funds that can be used for future payments. If it is in fact closed, close it, unencumber the funds that were committed, and then that could be available to the authority. All right? All right, and then number 7 is just the general, and certainly understand there's been a lot of turnover and transition. We've got some new folks and you know, some good new folks that are just learning. And we've got folks that have been here for a while. So I think this is the opportune time, especially we've found some opportunities for improvement. And you know, I know the folks, and we worked with them, and Tony worked with them. You know, they're doing a good job. They're trying just to get everybody together, just for consistency in regards to understanding when the award date starts. You know, so if you're working with as a project manager, you're working with a client, that's clear. Understanding what documentation can be and will be submitted, right? So, and understanding and just making sure if there's any gray areas in the policy, that everybody's on the same page. So we said, given the considerable size of the EIP funds awarded, management should take the time to develop a formal training program for business development managers, just to ensure everybody's consistently applying and understanding the policy. All right? All right, and so that should wrap it up. And once again, I want to thank everybody's cooperation. You know, we're all on the same team. We all are you know, stewards and of taxpayer, our citizens' taxpayer dollars, and we want to make sure we do the right thing. So we appreciate everybody's openness and receptive to our findings and recommendations, and I trust under the leadership of Taylor and Lisa and the board that we will take the necessary corrective actions.
What and how are they considered actually officially closed? I mean, the one thing is the time period of whatever is gone, but how can it be we have something from 2014?
So this is where it's like the project manager is working with the accountant and is updating the spreadsheet and ensuring they have that communication. Because obviously if the performance period has ended, unless the authority grants them more time, they're given a certain period. So once that period has ended and there hasn't been any communication that it's been, then they need to notify, because the accountant, that's really not, he's not going to know. So he's not going to go into the spreadsheet and mark close unless there is that collaboration.
So,
and reconcile.
respectfully, if I could provide some process comment on that. Our accountant, which, and it's important to note, we've been without one since February. The reason that he mentions there's things that haven't been done since February of '21, we've worked with the city's finance department as we could, but there's been no internal accountant for us. However, two things. One, the accountant does, coming forward, I guess starting in 2019 and coming forward, you'll find on every EDIP filing that we've done, the accountant does in fact sign the form. That's an important thing to note. I made that change the second month I was here. I think that's important. Also, the accountant provides quarterly updates on what's closing. On many of those, you will see there is, on the ones that go back to let's just say 2018 and prior, we have been actively working to close those accounts out. However, given that the Commonwealth is involved in 4 of those, I think one of those you are particularly aware of because it's in your part of the city, but we have closed out a number. But there are many that are unresolved, and that in most cases is attributable to the person that worked that case being gone and or unresponsiveness from the company. Something else to mention, though, it's important to note when we're talking about the availability of those. There was a clean audit opinion issued on these books by the city auditors, external auditor, every year that we have had that we have worked through this program.
That was 18's audit, right?
It's 18, 19, 20, and we'll have 21 next month, and so.
My question is more, is there like a process that we have to send a letter to the company?
We've sent letters and called it, and we do think
Do we have to vote on something to close, or is it something that actually the city, the development authority somehow says, well, it's
So, we do think that it, particularly on these older ones, and I will tell you, it was a surprise to me because information that I had gotten, and again, we've had a lot of staff turnover, I don't want to speak about folks that aren't here anymore. I was surprised to find out about the ones in 14, 15, and 16 that were still showing that they had available balance, because I thought we had closed all that out, and I appreciate Linda finding those. We'll get that cleaned up. But it's important to note, and you all will remember, we brought you more extensions, closeouts, and renewals in the last 3 years than we can count. We've been actively working this list, and it was actually much longer 3 years ago.
I guess Bill, and then we'll go to Penny.
A couple of quick questions. One maybe is more of a comment. On the employee grants, I appreciate you highlighting that. I think 3 of the 7 or 4 of the 7 were employee-related. Lisa, I'd like for us as a group to talk about the employee grants in general and visit that. If we could get that on our calendar somehow, that we have some collaborative discussion between staff and the board on how we want to proceed with those and some of the documentation, but also just our overall philosophy about employee grants.
And I think that's really a question of policy,
Right.
and should we change the policy? I think one of the instances that Lyndon brought to our attention was a company that we didn't really fully understand how they were doing their hiring. It's it's kind of a staffing firm, and I think that opened up the our policy is a little bit different from the state's policy, and in that case, I think we were working with the state on a state grant. So I do think it's probably a good time to revisit the policy, look at maybe the requirements, as far as I know your concern has been, have they, that job for at least a year. Maybe we want to tighten up some of that language.
And Mike has often mentioned many times that the actual wage base seems to be getting to the point that it's approaching almost what minimum wage is going to be in the future, and we certainly don't want to be incentivizing minimum wage jobs.
Yeah, so I think it's a good idea to take a look at that
Thank
again.
you. The second question that I had deals with the balances. One is process. When you talk about a spreadsheet that's being tracked, and a spreadsheet's offline, and it's only as good as the information that's put into it. From a control standpoint, is there a sequential numbering system that's assigned to an award once this body approves the award, so that we have some control over the number of awards and to be sure that every award is making it into this spreadsheet?
Yeah, that's a very good point. It'll just be like having pre-numbered checks, so you can ensure you account for everything.
Right.
We didn't see that, where we can go through and say, because of some number of numbering scheme, we know we've accounted for every award that was made, to see if it was actually.
Okay.
So
I know.
I'd like to speak to that again, since Sean Murphy, our accountant for 10 years, is not with us. We did have if you look at the disbursements, you'll see that there is generally a fiscal year reflected, which goes to award, as well as a number of disbursements that follows all the way through to the check. But I thank you for that question, because that wasn't part of our conversation. But I believe if Mr. Murphy was here, he would tell you that that was definitively part of his process.
So he assigns a number to each award that this body approves?
Yeah, and there's probably other sheets, what we were looking at from the spreadsheet we were looking at did not have them, but I'm sure he's recording just like some type of a ledger of all the various awards.
I don't want to resolve that now, I just want to get a sense of what we're doing, so maybe that's, again, a conversation we can continue to have. The second part of that, and Linda, this is more of a nuts and bolts accounting question. When an award is approved, I'm assuming that it doesn't meet the criteria to be recorded as a liability on the books. Is that a fair assessment?
From a financial statement
Yeah.
reporting, I don't think, in Sherry Becker or the auditors, I don't think they're recording it. I think for internal purposes in regards to determining how much committed, he's recording it, but from a financial statement.
Yeah, that's what I'm referring
That's not
to.
shown as a liability because it's based on performance and
Yeah.
are they actually do the amount.
Okay, so that's,
Yeah, but.
That's an accounting thing then?
That's on the accounting for just determining the amount of commitments.
the second part to
That's
that,
not a liability.
the second part to that question, then understanding that it's not a liability because it doesn't raise to that level. Do you think, or maybe we should have this discussion with Terry Becker, would it be appropriate to do some form of board-designated restriction of net assets for or for undispersed awards to really bring that into the financial statement and bring that into the year-end audit?
That would be a good idea, and, when they're here next month, that would probably be something, I think that would be informative for everyone.
I think also it brings that into the audit.
Reviewed and audited on an annual basis.
So what you're saying, Bill, is it's not part of the outside auditor's annual audit because it's not reflective of a
It may
liability.
be as a note,
Footnote, it could be a disclosure footnote.
but if we have it as part of our restricted net assets, it becomes part of the financial statement, and it's a little stronger in terms of its audit component, and then it's also reported out there, and I just, if it's something possible, I'd like to talk to Chair Beckert about that.
So I'll tell you, staff welcomes that recommendation. That's actually a great idea. It is something we track internally, but it's not something that is being physically recorded. I don't even know that if Chair Beckert wants to make that recommendation, we'll take it, but by the same token, we think that's a great idea, and that's something.
Yeah, I think that
we usually
would be something they could include in the footnote, the disclosure.
We welcome that.
Thank you. I don't want to take any more time. Thank you.
Okay. Penny, you had some questions. Are you covered? Any other questions?
Just one quick one. Is there, in regards to the date that the money's assigned, you said that you can't hire employees ahead of time. Is there exceptions in place for people that are ramping up for, let's say they bought the equipment or they have to build up their staff beforehand?
Yeah, I mean, really, that's all about the policy and what the board wishes to do. Right now, it says, after the award date, but that's something.
Maybe in the description of the application, because most of the time in business, you can't just
Sure.
start the date.
Absolutely.
You have made that exception in prior resolutions where companies that is an exception that we have made, and it's generally handled at the table as part of the resolution where you all acknowledge that exists. And because the company is ramping up with just initial sort of advance employees, you have counted it.
And the policy contemplates looking back to the date that the matter's considered in closed session, so it gives you some more time before the vote.
And I think in any organization, there's room for process improvement. So Lyndon, we appreciate you going back, following up on the 2018 audit. I think we've made a ton of progress. I know Taylor and Alex and the staff have been working hard, and we do have a relatively new staff, so I think going forward, these will be great improvements to implement. And We appreciate your recommendations. Taylor, did you have?
I just want to quickly say thank you to Lyndon and his team. I mean, when I got here, and Tony, when I got here, gosh, it's hard to believe, 3 years ago, we inherited, I think it was 16 findings, 8 of which were, 16 hard findings, 8 of which were material weaknesses. Fast forward 3 years, and with Lyndon's help, I mean, really everything that you're seeing here is procedural in nature, and I think Lyndon would tell you nothing represents a material weakness in our program. These are just ways to continue getting better.
Absolutely.
And so, and also, would be remiss if I didn't say Lyndon's observation. This is what I enjoy. One of the things about this project, about this process, which is both great and challenging, is it's a moment, it's a snapshot in time, and this is happening at a time when we have been without an accountant, feeling the same workforce shortage as everyone in the region is having. But I appreciate his patience with us and his recommendations, which will help us get our new accountant off to a much better start. And again, thank you for the partnership, and really excited about being able to move forward.
And it's so much better than our last meeting with him. I think it's just fantastic.
I'll just sit down on that.
Fun, I guess. All right, thank you, Lyndon, we appreciate that. All right, the next item on the agenda is a request for authorization to exercise a 5-year renewal option for Virginia Beach Golf Club.
So,
Taylor's gonna handle that
yeah,
one.
I'll jump up and handle this one. And I'll do my best. I got off a plane at 1 o'clock in the morning, and so my coffee cup's empty. I'll fill it here in just a second. But as you all know, one of the authority's common assets is Virginia Beach National Golf Course, which we have had since the PGA sort of ended their tournament here some years ago. You can see our applicant is Virginia Beach Golf Club LLC, and an affiliated business entity is Heron Ridge Golf Club, where the city also has an existing public-private partnership. We're asking for a 4-year extension, or excuse me, you approved a 4-year extension in March of 2017, and then there were optional extensions. The resolution for consideration here is to exercise one of those options. Percentage of gross revenues paid to VBD are 12%, which is an increase of 10% from the 17 lease. And with that, we would recommend approval. Before I get out of the way, I'll just tell you, last year we made more. Our portion of the revenue share was a number we'd never seen from National before. And in talking with the leadership there, rounds continue to be strong. You all will. Were kind to reinvest in some of the facilities. We have a strategic reserve that for capital maintenance of the track. We've not made an investment in the buildings themselves for some time. You all have made some reinvestments there that are bearing fruit. The facility looks great. Rounds are up, and with that, we would ask that we continue this public-private partnership that is performing.
Great, any questions for Taylor on the management contract renewal? I think last year, it's safe to say, most people looked for things to do outside, so the golf courses were packed. Oh, yeah.
And we see that that's continuing, and also now that tourism, and specifically sports tourism, youth-focused sports tourism has fallen into this portfolio. We think there's real opportunity for the future here, and we would ask that you approve this extension.
Wonderful. So the chair will entertain a motion.
So moved.
Got a
Second.
motion and a second. All in favor of the request, say aye. Aye. All opposed, same sign. That motion carries. Thank you, Taylor. The next item that was supposed to be on the agenda was a request for approval of a resolution for EDIP Part C. And it looks like that's got to be deferred because it has to go through the Oceana Land Use Conformity Committee first. So we'll defer that one until next month. Next item on the agenda is the request for approval of a resolution authorizing an extension to time to satisfy a Commonwealth AFID grant. You want to address that, Alex?
Yes, ma'am. And forgive me, we did not get disclosures for this item. It is Back Bay Brewing. I know at least one of the members here is going to abstain. We, in 2017, gave an EDIP to a predecessor of Back Bay in the amount of $20,000. That was a matching grant to the agriculture.
Forestry.
Thank you, Forestry Industries Development Program at the Commonwealth. Our EDIP has been completely satisfied. They have hit all their targets. The APHID grant had a third target in addition to capital investment and jobs, which was the purchase of apples. They are short on their apple purchase. They've asked for an extension. Under the statute, the longest extension they can get is until May 27th of next year. We are administering the grant, so we have to consent to the extension from the state, but it isn't your guys' money. It's just your administration of $20,000 of state money.
And the state agrees that the extension is appropriate.
They agree it's appropriate, but won't say that until you guys ask for it, because bureaucracy.
And again, we're just administering this.
Correct.
And they've met all the criteria that we've set for it.
Correct, they
This is
have
an
exceeded,
additional.
it was a $750,000 capital investment, they're well over 2 million. 9 jobs required, they're at 11, so.
Great.
They just
All
haven't
right.
bought enough apples.
Sounds like it. Okay, so Bill will be abstaining. Any questions on this for Alex? All right, the chair will entertain a motion then for a request for approval of the extension of time to satisfy that Commonwealth APHID grant condition so that we can formally make that request to the state.
So moved.
Got a motion and a second. All in favor, say aye. Aye. All opposed, same sign with Mr. Brunke's abstention.
Who was the second on that, Lisa?
Gunther? All right, administrative information, any VBDA priorities? I know holiday celebration venue is on here. I don't think, Olivia and I haven't had a chance to discuss that in great detail, so we'll be coming back next month to update you all on that. We do have, if you noticed, there was a line item in the budget for it, so we'll be staying at or below what has been budgeted. I know Bill, you mentioned you wanted us to work on the policy as far as employees and how we look at that and track that. Any other members have items based on what we've heard or otherwise that you want to? All right, hearing none, we'll kick it over to Taylor for the director's report.
I just have one quick thing this morning.
So tired.
And this is one of the one of the fun things that I get to do in my role as a deputy city manager. But we have with us today our director of cultural affairs. So within my portfolio, we have economic development, tourism, cultural affairs, and then we provide support to our local registrar, who of course the council appointee. But have Emily Sproul-LeBeau's with us, who is celebrating 20 years with the city of Virginia Beach, and we have a certificate that we'd like to present to her. If you all would please join me in expressing thanks and congratulations. There you are. Thank you.
Wonderful.
Thank you so much.
You started as a high school intern, right?
Yeah.
You know, in addition to our Sandler Center, which is prominent in the programming there, Emily also has all of our historic homes, which really, and as well as public art in our community, all things that truly enrich both our guest experience, but also significantly contribute to the quality of life that our citizens have come to expect day in and day out. And so, Emily, none of it's possible without you. Thank you so much.
Thank you. Thank you.
That's all I got.
All right, thank you, Taylor. With that, the chair will entertain a motion to recess into a closed session pursuant to the exemptions from open meetings allowed by Section 2.2-3711A Code of Virginia as amended for the following purposes. publicly held property, discussion or consideration of the acquisition of real property for a public purpose or of the disposition of publicly held real property, where the discussion in an open meeting would adversely affect the bargaining position or negotiating strategy of the public body pursuant to Virginia Code Section 2.2-3711A3. Contracts, discussion of the award of a public contract involving the expenditure of public funds, including interviews of bidders or offerers, and discussion of the terms or scope of such contract, where discussion in an open session would adversely affect the bargaining position or negotiating strategy of the public body pursuant to Virginia Code Section 2.2-3711A30.
So moved.
We've got a motion from Mr. Brunke and a second from Penny Marshall. We'll have to do a voice vote on that, right, Vicki?
William Brumke,
Yes.
Taylor Franklin,
Yes.
Kenny Morgan. Yes. Lisa Murphy.
Yes?
Mike Standing,
Yes.
Joseph Strange.
Yes.
Peter Weisenstiel.
Yes.
Scott Wood.
Yes.
All right, we have adjourned to closed session.